Hello. Well, it's always good to see somebody coming up with suggestions for improvements to tax, and this is a group that's put together a series of proposals for improvements to Britain's residential property tax, the council tax. So let's go and have a look and see what they're suggesting. Here's the homepage of their website. You can sign the petition if you want, if you like it. Here's their manifesto. You can go in to the site and look at it more detail, but here are their main points. I'll go through them one by one. A simple flat rate of 0.48% on the current value of your property. Well, that's got to be better than using 30-year-old values, which is what the council tax does. We will scrap council tax, stamp duty and bedroom tax. Well, that's a good thing if they're replaced by something better. And stamp duty is a tax on moving. It's a bad tax in principle. The tax is only paid by property owners, not tenants. Well, that simplifies things for a start. But it's also the case that property owners carry the burden of the council tax anyway. If you own a property and the local council puts the council tax up, it restricts the amount that the tenant can pay to a landlord, so they're competing for the same revenue, so it makes no difference who pays it. It simplifies it to make the tax on the property owner. Payment of the tax can be deferred for those owners unable to pay. Well, that's a good thing. I assume they mean people like pensioners. I think it's a good thing also that it's deferred and not cancelled altogether. Exemptions on second homes and undeveloped plots will be scrapped. Well, again, that's got to be a good thing. I assume that an undeveloped plot is one with planning consent. There's a lot of those that are being sat on at the moment by developers, so it will encourage them to get the sites developed once they've got their consent. I assume there'll be some kind of grace period to give the developers time to put their buildings up. Annual and automated valuations for all properties. Well, of course, the valuations should be recent. These days it's possible to keep them well up to date because there's such a lot of information available. You can see it for yourself on property websites like Zoopla. Automation is possible because changes in value tend to be pretty uniform within an area that you can just apply a percentage for each year. So that all sounds eminently sensible. The only thing I don't like about it is that they're using the selling price of properties. I think that's a bad idea. I think it's going to get them unnecessary opposition. The rental value is a much more accurate measure of property value than the selling price, because as we know, selling prices have gone wild because of ultra low interest rates and easy credit. If the value is on the rentals, people will not take fright, I think. The rentals have just more or less kept pace with wages. But otherwise, I think they're a thoroughly good set of proposals. And the tax will be national rather than local, which again is a good idea because there isn't a lot of land value in places like Whitley Bay, whereas Westminster is flush with it. And this objection applies to every form of local taxation. It would apply to local income tax as well. Local councils only get about less than a third of their revenue from council tax anyway, so I don't see the point of keeping it localised. I know people say it's about accountability, but accountability is really about how local politicians spend the pot of money they've got. That's all I'm going to say about fairer share, but let's have a look at the rights and wrongs of property tax in general. Because people object to council tax, they say that everybody uses the same services, everybody has their bins emptied, so that's all that councils do. Well, let's have a look at some rents in Brighton, which are an indication of how things work. Now, obviously, the value of a property is dependent on more than its location, but location's the important factor. I've looked at two-bedroom flats. The cheapest seems to be about £950 a month. Well, that was a two-bedroom flat in Bedford Square, which is probably not a very good conversion because they're very old buildings. So that's not a particularly good indication, but the next one really is Herbert Road, and that's a modernish flat, a rather boring area. It's not near Brighton main station, it's half a mile from Preston Park, which not all the trains stop there. and it's not very good for shops or anything else really. It's not much point in being in Brighton. It's a long way from the seafront even. The next one is quite a nice flat, but it's way out of town. And again, it's nearly a mile from Preston Park. And again, a long way from the seafront, a long way from shops. So quite a nice flat, but not a very good location. So that shows how poor location can knock down the value. Now here's a flat at the high end. It's not even in a very nice location. It's a rather ugly recent development, if it's where I think it is. But it's only 200 yards from Brighton Station and it's near the shops. Got a big Sainsbury's on its doorstep. It's not too far from the sea, so of course it's going to be attractive, especially to commuters, which is what drives the Brighton rental market. Now here's a nice flat, nice and big this one, nice location too, less than half a mile from the station, view of the sea as you come out your front door, downhill to the shops, there's a Waitrose not far away, so that's going to attract a good price. Here's one in Churchill Square, the next one, 2355, that's near all the shops, near the sea, a little bit further to the station, but a quarter of an hour at the most walk, so that's not bad either. And here's another one on the seafront, 2,300 a month, King's Road. The best of apartments in Brighton. This one really does have amazing sea views from its 16-foot private patio balcony. Yeah, all quiet. It's a big attraction. So this illustrates the advantage of location even within a small area. The ones near the seafront or the station are the ones that command the high prices because people want to live there. Now, those amenities are provided at public expense. The railway can provide a good service because vast amounts of public investment have been made in the infrastructure so that frequent train service can be run. Brighton seafront got rather run down over the last 20 or 30 years, but recently it's had a lot of new investment. Again, it's public money, and it also costs public money to keep the seafront looking clean and tidy. They don't always make as good a job as they might have, but there we go. It's public money is being spent to support the values of the property. So a tax based on property values is clearly related directly to the benefits that are provided at public expense. So if people say that's unfair, well, it isn't. It's fair.